Hi, everyone. I'm John Ma, partner and co-head of the North American investment team for Igneo Infrastructure Partners. For those of you who don't know Igneo Infrastructure Partners, we are a infrastructure manager with a history of over 30 years as a platform, and we're focused particularly on the mid-market for infrastructure. Currently, as of mid-2026, we have a bit over $25 billion in assets under management across a global as well as European, North American, and Australia, New Zealand regional strategies. The FBO sector, FBO stands for fixed-based operator, which is basically the segment of aviation infrastructure at airports that services non-commercial aircraft, primarily fueling, providing fuel, as well as hangars for the parking and storage of non-commercial aircraft. The FBO sector can also encompass some ancillary services. Some FBO businesses that you'll encounter might offer a little bit of maintenance or some aircraft charter and management services. But the primary focus of an FBO business is on the fueling and the hangars, again, for private aircraft. Well, the FBO sector in the US is, we think, very interesting. There's a couple of large players in the market, large cap players, but their strategy is primarily focused on the very high fuel volume sales markets, generally around the highest volume general aviation markets in the US at what you might call tier one general aviation facilities. But beyond those top two large cap players, there is a highly fragmented industry in the FBO sector alongside of it. There are literally hundreds of additional FBOs across the United States, serving a variety of markets. And one of the long-term tailwinds that we see in the FBO sector is that structurally there really is a shortage of quality hangars available out in the U.S. And at the same time, over the last several years, over a relatively sustained period of time, there's just been a rising number of aircraft in the US, rising demand for private air travel for some reasons I can touch on. And importantly, the planes themselves are getting bigger. The tail heights specifically are getting bigger. So a lot of the hangar supply out there is really just too small and outdated for today's modern private aircraft. So when you look at some of the so-called tier one general aviation facilities in the US, they're essentially full today. If you were to be lucky enough to be the new owner of a modern private jet, you'd have a very difficult time finding hangar space at a major metropolitan area FBO. You could still fly in and fly out from that airport, but in terms of parking your aircraft overnight, storing it, and home basing it, again, this is a very, very supply constrained market in most places around the U.S. And so, again, there's structural shortage of quality hangar space around the U.S. And we're seeing a lot of opportunity are in some of what we would call tier two or tier three general aviation facilities, where there is a bit more available land. And aircraft owners are going to facilities like this to find a place to actually store their aircraft. So again, a lot of long-term underlying demand coupled with shortage of supply of hangars. If you look at the order book today from the OEMs, the manufacturers of the private airplanes, there's a backlog of 2 to 3 years just to take delivery on a new aircraft. There's that much demand. For those of you who live in the US and travel around, I think you can kind of appreciate the fact that flying commercially in the US is not an easy thing to do, depending particularly on what part of the country you're trying to get to. So we've seen this steady increase in demand for private air travel. What we've also seen in terms of tailwinds behind the industry as well, driving the underlying demand for private aircraft is there's been a growth in fractional share programs or other ways, jet cards, in which those still high net worth, but maybe not ultra high net worth individuals or corporations looking for efficient ways for their executives to travel can access the private aircraft market, charter market, without actually having to own an aircraft. So all these things have really helped fueled underlying demand in this segment in the U.S. And when you look at the actual FBOs, coming back to how the market is structured in the US today, one of the things that really attracted us at Igneo to the segment and our investment in Infinity Aviation is the fact that the market segment is highly fragmented outside of those two larger players in the market. There's still a lot of FBOs owned around the US that are of quality, often in truly private ownership hands. And so part of our strategy or approach to this segment has to really been build a platform. We've partnered with a terrific chief executive, Stephen Levesque, who's got a lot of experience in the industry, building the Infinity Aviation platform. Well, the aviation market in the U.S., if you go back, probably back to the 2000s, there was some optimism at the time that you would see a lot of whole airport privatizations in the U.S. But for a variety of factors, that privatization movement of the entire airport just really hasn't taken off. I guess pun not intended. But nevertheless, I think there's still, interest in real opportunities for private infrastructure investment in the aviation infrastructure ecosystem. We've seen some terminal redevelopments with private capital invested in. We like the FBO sector, as we've talked about, for a variety of structural reasons and demand-driven reasons. But there are other parts of again, aviation infrastructure that we've looked at that we think are interesting. It's really a highly fragmented ecosystem, we'd call it. If you think about an airport, there's cargo operations, there's catering, there's ground service handling, in addition to the terminals and the commercial operations, in addition to the FBO operations at a lot of these airports. So lots of hard asset infrastructure, which makes it, the aviation sector continue to be an interesting one for us that we look at. But back to Infinity Aviation and the FBO sector, I think for a variety of industry structure reasons, that one was of particular interest to us. We thought it was a really interesting investment opportunity. At Igneo, as I mentioned, we're a global business, and we've got a lot of experience in the aviation sector globally. We're the owners of airport assets in Australia, for instance, that have been held within our portfolio for over 30 years. So a lot of experience in the aviation sector globally. Personally, I have some experience from a prior life in the aviation sector, working at the Port Authority of New York and New Jersey. And so we really tried to leverage that broader global experience in the sector into how we've approached the aviation market in the US and North America. In the US, if you go back to the mid-2000s, there was a lot of optimism about whole airport privatizations here that really hasn't come to be. However, we still find the airport ecosystem overall to be an interesting one with a really targeted approach to find mid-market type of opportunities, such as the Infinity Aviation investment and the FBO sector more broadly. At Igneo, as I noted in my introduction, we're very much focused on the middle market for infrastructure. And so if you take Infinity Aviation as an example, we're really looking for where we can take advantage of mid-market size opportunities and really drive value creation through a business over time. In the case of Infinity and partnering with Stephen, as I mentioned, it's a highly fragmented sector. We could build a platform together with Stephen, also in acquiring these assets from truly private owners in most instances. I think there's real opportunities to create value through our asset management plan and working with Stephen. there's opportunities to build hangars. I noted that there's a structural shortage of modern hangar capacity in many places around the U.S. So investing into new hangar capacity is definitely an area we can create value, as well as just professionalizing the operations of a lot of these businesses that up to now have been really in sort of mom and pop owners' hands. Quality infrastructure, but there's definitely ways to professionalize these operations and create value as a result. When I speak of the middle market approach that Igneo has and sort of the middle market lens through which we approach the FBO sector, I will say that starting relatively smaller with Stephen, with the Infinity Aviation platform, is really some of where we thought some of the most interesting opportunities sat. By starting with a couple of individual facilities in a couple of attractive markets, we thought there was really attractive entry value acquiring from at this level and at this scale. So for the FBO sector in the US, basically, we've really approached it with a little bit more of a focused lower middle market lens, just because of the relative value and opportunity to create value at this end of the market, given the fragmentation of this particular sector in the US.